Right. Good morning, good afternoon, or good evening to everybody that's joining us. And thank you for being here today for Afriforesight's webinar, in which we will bring South Africa's chrome and manganese sectors into focus. My name is Nathan Musson, Afriforesight's chief economist. And for newcomers to this forum, we are one of the largest mining research houses in Africa, with a multidisciplinary team ranging from economists to engineers, and we provide forecasts for Africa's key extracted commodities and the major cost items required for mining and mineral processing. In today's webinar, after I give a quick overview of some of the SA mining sector trends and our global economic outlook, my colleagues Komotso Rabutla and Devon Alaris will unpack our views around the chrome and manganese sectors and highlight how new SA government policies could impact the future of these industries. Although we will be brief, we will cover as much as possible in the short time, but all the information in this webinar and further details are included in our various reports, which are available to our subscribing clients. If you're not a client or do not have access to any of the particular aspects we're showing you today, would like to find out more, you're free to contact Sebastian Naidu, our Business Development Executive, or Kelly Marti, our Client Servicing Manager, using the details on screen. We will also be answering your questions live at the end of the presentation. To submit any questions for that, please use the Q&A function of Teams itself, which, depending on how things are set up on your side, could be the top or bottom of your application. There should be a Q&A button to open up a mini chat window where you can leave your various queries. If you do happen to have to leave early, that's no problem, or you think of a question after the fact, you can also then mail your questions through to the details on screen. And lastly, a recording of the webinar will be available on our website from later this week. It's only there temporarily though, and once that expires, our clients though can still request a copy as needed down the line. So to jump straight into a little bit of why we see chrome and manganese as so important for South Africa's mineral mix is what's been happening over the last 2 decades or so. And looking in at the red and light blue segments here, which correlate to manganese and the chromium sides respectively, you can see that there's been a sustained and substantial increase in the revenues generated proportionately from these sectors over the last 2 decades. Put it in a little perspective, right back in 2003 rather, the combined mineral sales from manganese and chrome totaled less than 3% for all mineral revenue coming into South Africa, compared to the 6 and 8 or total 14% that we saw in June of this year, which curiously enough happened to equal what we saw coming out of the gold sector. So if you squint a little bit, you might consider that the combined revenue efforts that come out of chrome and manganese are in a way akin to our gold sector, in terms of primacy, and that's come through in the last 2 decades. If you compare that to some of the other major aspects of the South African revenue mix, while we have seen a sustained increase in iron ore over the last 20 years or so, the peak in terms of actual revenue was back in 2010, 2013 or so, and within the last 5-6 years, we have been constrained by mostly rail issues and logistics constraints, holding back our potential to move as much product as is needed there. Gold is at a generalized decline, mostly related to depletion of our local reserves, although there has been a little bit of a recovery in terms of overall revenue of late because of how high the prices in the sector are currently. Coal has been relatively stable through the years, and while it is still a mainstay of our mineral base at the moment and is expected to remain so into the medium term, once we get towards 2030 and certainly beyond that, the requirements for Eskom's coal burning needs are expected to decline and be a long-term issue for the coal sector. PGMs, on the other hand, if you were with us a couple of months ago for our webinar, we are relatively positive on that, and we're not expecting necessarily that sector continues to see decline. But in terms of where it has ended up in the first half of this year and through last year, it is comparatively weak in terms of revenue generation for most of these last 20 years. Now, I pointed out that relation between 14% of revenue comes from chrome and manganese versus 14% from gold. And something curious also comes out when you look at the labor requirements to sort of effectively generate that revenue. The sizes of these various industries differ quite dramatically, And looking specifically at chrome and manganese, they are relatively small, but combined they total about 40,000 employees for the country, which is less than half of what is required for our gold processes. So, in a very direct sense, you need less than half of the people to generate that amount of revenue currently. There are a few reasons for that. The mature state of the gold sector is part of it. The ability for chrome and manganese producers to utilize relatively heavy equipment rather than send individuals down with handheld drillers down into shafts is also part of it. But it gives a sense that there is a relatively good way to generate value if we can see further growth in these segments. But despite these relatively favorable background trends and the seeming ability to generate good productive activity out of the segments, government in recent years and again more recently in recent months has been looking to support specifically ferrochrome, but the broader beneficiation base in the country, looking to control exports to minimize illegal activity, as well as align our electricity cost base to make sure that we can potentially remain competitive against the other global producers, as well as digging further into the idea that we need to boost our rail and port infrastructure, as well as provide incentives for these sectors to remain competitive. Now, the main issue for the government is the feed through the integrated nature of these various supply chains leads from chrome into ferrochrome, for instance, into stainless steel. And there's a similar pass through of manganese ore down towards its main use of steel at the end of the day. And it's those middle initiatives, those interim products that need to be made, where South Africa is definitively struggling at needing these various supports. But the SA government can only deal so much with the various aspects constraining or holding back these various industries, and it can only really deal with what we have within the country. And when you look at the demand side for both chrome and manganese, by and large, it is obviously the global economy that is driving the various demands. And in both sectors, South Africa is absolutely crucial to providing the global economy with enough raw materials to feed into the large-scale crude steel and stainless steel sectors. So before we get into all of the various details about what's happening within South Africa, I'm going to turn to our global overview as well as a quick rundown of what's been happening in crude steel and stainless steel going forward. So in terms of global growth, we have been turning our outlook a bit more negative over the most of the year. We already were looking fairly negative coming in with lots of conflict zone and geopolitical pressures, as well as the slowdown in China being the main issues in our view, as well as certain aspects of Europe's energy system being quite fragile and under constraint. But as we come into this year, the main issue that has come through is the extremely severe amount of uncertainty around US policies and their shift towards more aggressive trade policies, and how they're dealing with geopolitical relations and tensions, how that's been driven up, especially around the Middle East. And the underlying loss of some sentiment around the US economy is also seemingly propping up the interest rate aspects there. And we are expecting a slowdown in the US growth specifically, as well as a tendency to hold back some of the potential for the global economy as we move specifically through the next couple of years. A couple of months ago, though, when we looked at PGMs, we noted some areas of stabilization. Manufacturing figures for the major economies were either stable or, in the case of the EU, tending back towards a point of neutrality. Supply chain disruptions were tending to improve over time, and we saw a little bit of a better outlook for the auto sector, all of which should be somewhat supportive of chrome manganese in general, but more specifically, construction is expected to be a major driver of both these segments. In crude steel, it is the single largest driver of the use of steel at the end of the day, therefore the single largest driver of manganese demand at the end of the day. And on the stainless steel side, while construction is not quite as large of a contributor, beyond the fact that you need the buildings themselves, you need the equipment to build them at times, and you need more stainless steel products to finish and furnish these buildings as you go in. So looking in at some of the trends in China recently, where we have seen a sustained issue over the last 4 to 5 years, as the property sector has gone through a major decline. We are seeing some relatively positive shifts in how the trends are progressing, with the stabilization of that decline rate and the potential for it to be moving towards a neutral point and potentially moving us towards some stability and some growth, as we move maybe beyond next year into the medium term. The pricing of houses in the various cities around China is also moving towards that point of neutrality, suggesting that we are at least approaching a point of stabilization, if not quite there yet. So part of that recovery there, or at least stabilization of demand from China, is why we see demand picking up into the medium term slightly. The expectation that we can gradually work our way around all of the various supply chain constraints that existed prior to the Trump administration issues, and what we are seeing now is this is expected to boost our growth as we move into the medium term, assuming we don't have major conflict blowouts to generate more constraints, and green transition developments are still expected to be a large part of some of the sustained investment as we move forward. So broadly speaking, we are expecting a bit of a recovery as we go into the medium term, although the levels are still relatively low. We still see constraints around Europe. We still see issues with the potential delays of investment in the US and other places related to these trade constraints. But nonetheless, we do not expect a global recession, and we should be seeing a little bit of a pickup in activity as we move forward. And with that, we will turn to look at how things are progressing in the steel and stainless steel sectors.
Before we proceed with an in-depth analysis of the market conditions for chrome and manganese, it is crucial to first understand the underlying drivers of demand for these metals. A primary source of this demand stems from two critical industries, which is the steel and the stainless steel industry. At this point, it is essential to distinguish between steel and stainless steel, as this distinction directly influences the consumption patterns of chrome and manganese. So while both steel and stainless steel contain iron and carbon as their core components, the defining characteristic of stainless steel is in the presence of at least 10% chromium content. This key difference makes stainless steel production a major driver for chrome demand. And with that in mind, it is important to also examine the production dynamics within these two industries and their respective contributions to the global demand for chrome and manganese in respect to steel. Before we get into the end-use demand for the steel and stainless steel, it is important to briefly recap the upstream fundamentals. This is just to provide context and structure. Manganese ore serves as a vital input in the production of ferromanganese, which ferromanganese is an essential alloy used in the steel-making process to improve your hardness, your strength, and wear resistance. Similarly, with chrome, chrome is a key raw material used in the production of ferrochrome, which is a critical alloying element in the production of stainless steel. So now that we have those fundamentals structured, now we can examine the end-use demand patterns for steel and stainless steel. We find that although these materials serve different industrial functions, they are both different. They are both driven by similar sectors, as shown over here. Key sectors such as your construction, your automotive, your metal products, and industrial equipment or mechanical equipment all contribute meaningfully to the overall demand for these industries. In the case of crude steel, the construction sector stands out as the primary consumer, accounting for approximately 50 or 52% of the total demand, mostly attributed by in developing countries where infrastructure investment continues to rise. As such, construction is expected to remain the leading driver of steel demand for the foreseeable future. And in the case of stainless steel, while construction contributes around 12%, the demand is more the demand in the case of stainless steel is more diversified, with significant contributions from sectors like your metal products and industrial equipment. Speaking about those metal products in particular, they are a major major end-use demand for stainless steel, reflecting its widespread application in tools, equipment, and fabricated components. Meanwhile, industrial and mechanical equipment sectors play a crucial role in shaping demand for both steel and stainless steel, supported by their ongoing capital expenditure and manufacturing activity globally. We also have consumer-driven sectors such as your automotives, which also represent important demand segments for both steel and stainless steel. While these sectors are occasionally subject to external factors, as seen with the impact of the US tariffs, they maintain a long-term correlation with consumer spending patterns. As household incomes grow and global consumer confidence improves, so too does the demand for vehicles, appliances, and other durable goods that rely heavily on both stainless steel and steel inputs. Despite the short-term volatility, particularly in the automotive sector, these industries are expected to continue playing a significant role in overall demand, coupled with the broader structural drivers such as your urbanization, industrial development, and the global push for green energy infrastructure, which are expected to sustain high levels of construction activity in emerging markets. And this in turn will support continued growth in the demand for steel and stainless steel materials, reinforcing an upward pressure on both chrome and manganese consumption. Now, turning to the supply dynamics, the majority of the global steel and stainless steel production is concentrated in China, and in fact, China accounts for roughly half of the steel sector, and over 60% for the stainless steel output. This is China is then followed by other Asian producers such as your India and Indonesia. This is before now expanding globally to Europe and USA and other countries. In the steel sector, production levels have shown a significant volatility, fluctuating between 400 and 500 million tons per quarter. As highlighted in the production by country chart, the second half of 2024, we saw a notable decline in China's production levels. These drops can largely be attributed to the ongoing weaknesses in the property sector, and the contraction in the property market has had a coinciding effect on the steel demand, leading to the reduction in production as a response to the weakening market conditions. China's decline in demand for housing and its slower growth in infrastructure investments are continually weighing heavily on construction sector and further dampening the steel demand. However, there are some signs of recovery as seen in the first half of 2025, according to seasonal trends like the steel like according to seasonal trends, steel production is expected to rebounded in the first half of 2025. This while supported by the growth in the key sectors such as your manufacturing and green energy sectors. Furthermore, as China enters into its peak production season, one of those seasonal trends, expectations remain high for an uptick in steel production, although such growth may be constrained by the ongoing policy restrictions in China that is aimed at curbing emissions from polluting plants. And those restrictions have been impacting the production of steel in China. Elsewhere, crude steel production is showing a positive growth in regions like India, Southeast Asia, and Middle East. This is primarily driven by the capacity expansion projects that they have, which much of which is supported by the Chinese investments. These regions are set to continue contributing to the global steel supply in the coming years. And when we turn a look into the stainless steel sector, production has been gradually increasing as China and India and Indonesia expand their capacity. However, similar with the steel production or output growth, China output growth in the stainless steel is constrained by the capacity limitations due to the policy restrictions. And on the other hand, your India and Indonesia are ramping up production to meet the growing domestic demand in their respective countries, driven by the infrastructure development and the automotive industry. Now that we have explored the demand side for both chrome and manganese, let us shift our focus to a more detailed overview of supply dynamics, particularly in South Africa. South Africa is a significant supplier of both chrome and manganese, and various sectors are influencing the supply from this region.
Thanks, Kamasto. So yeah, let's begin with a bigger picture. Just to recap, chrome is best known for its role in the stainless steel industry, where it does provide corrosion resistance, heat tolerance, and durability. Stainless steel makes up about 85% of chrome consumption, but chrome also plays roles in aerospace, chemicals, and plating. So without chrome, you'd see entire industries from construction to food processing ground to a halt. Manganese is indispensable in the steel industry. Over 90% of manganese mined globally goes into steel making. The remaining share is growing rapidly in batteries or electric vehicle supply chains. A high purity manganese sulfate is increasingly used in your NMC and LFP batteries. So South Africa is central to both. We supply roughly 45% of the world's chrome ore. We produce around 37% of the world's manganese and hold around 70% of the world's manganese reserves. That means these commodities aren't just important to us, but they're strategic to a global supply chain. And as industries pivot towards decarbonization and battery technologies, South Africa's role is more critical than ever. So South Africa's leadership position comes from its unique geology. The Bushveld complex hosts the richest chrome deposits, and the Kalahari Manganese Basin is the single largest manganese resource globally. This gives South Africa a clear strategic advantage. We have a depth of mining expertise and technical know-how. We also have a historically strong infrastructure network with rail corridors and ports connecting these commodities to the global market. We also have a large installed base of ferrochrome smelters, giving us beneficiation capacity. However, Many of these strengths are under pressure from underinvestment and operational challenges. Our natural resources are unmatched, but logistics and policy issues threaten our competitive edge. So South Africa has historically dominated the chrome market, both in ore and ferrochrome. We we are the world's dominant chrome ore supplier, responsible for over 40% of global output. And historically, this gave us a massive edge in ferrochrome production, with a network of smelters that supplied stainless steel producers worldwide. However, we're seeing a global shift. Over the last 5 years, multiple South African ferrochrome smelters have gone offline. At least half of South Africa's 59 furnaces have shut down. Eskom's rising electricity tariffs and years of load shedding have made smelting unprofitable in the country. Glencore, Merafe, Samancor, and other producers have idled furnaces or run at reduced capacity. Several furnaces are on care and maintenance with no clear restart timeline. And as a result, China has captured market share by importing our raw materials and building its own smelters. So South Africa is increasingly exporting its ores while downstream value is created elsewhere. We have seen declines in ferrochrome output over recent years and a general stagnation of South Africa's ferrochrome exports, although volumes were supported by increased volumes through Mozambique's Maputo port via Komati port to bypass Durban congestion. The government's export tax proposal was meant to push beneficiation, but without solving power shortages, it risks hurting miners without reviving our smelting operations. There is opportunity though. The world still needs South Africa's high quality UG2 chrome ore, a byproduct of platinum mining. Private energy generation and new rail partnerships could bring smelters back online. So with the right incentives, South Africa can rebuild ferrochrome market leadership. But right now, our chrome sector is at a critical crossroads, rich in resources, but falling behind in terms of beneficiation. Ferromanganese is another strategic alloy, critical to strengthening steel. As of September this year, there's only one operational ferromanganese smelter left in South Africa. That's Transalloys in Mpumalanga. Asmang's Kato Ridge Works closed in August of this year. Samancor's Meta Alloys has been suspended or inactive since March 2020, with discussions of restart still on the table. Just in June, Minar's Quellamet finalized the acquisition of the smelter, aiming to refurbish and gradually restart it. But South Africa's ferromanganese industry is currently running at a fraction of its historical capacity. The sector faces many of the same challenges as ferrochrome. Ferromanganese smelting is energy intensive, and Eskom's rising tariffs and load shedding have eroded margins. Logistics bottlenecks limit competitiveness compared to regions like India and Malaysia, who enjoy lower production and shipping costs, while investment in new capacity has been minimal over the last 10 years, while competitors have invested heavily in capacity and efficiency. India has become a key customer for South African manganese ore, with imports rising steadily over the last 5 years. India's producers are rapidly ramping up ferromanganese production, supported by better power availability and lower logistics costs. But essentially, South African ore is now fueling India's alloy exports. So while South Africa struggles with bottlenecks, India is seizing the opportunity to grow its ferromanganese industry. If South Africa wants to compete, it must fast track those logistics reforms and energy incentives. It must also attract new investment into processing, especially as your demand for battery-grade manganese rises. Otherwise, South Africa is at risk of being locked into a role of being a raw material supplier, missing out on that downstream value. But in short, South Africa's ferromanganese market is currently under pressure, but fundamentals are strong and reform could unlock growth. So let's take a step back, look at the broader manganese market. South Africa, Gabon, and Australia dominate global manganese production, but Australia is steadily growing its share thanks to reliable logistics. South Africa's ore is high quality and abundant. We are also well positioned to supply to the battery grade manganese, which is becoming increasingly important in the EV market. We have seen South Africa's output and exports continue to rise despite the challenges. The port capacity expansion at Saldanha Bay was a strong supporting factor, while ore demand was strong after cyclones in Australia disrupted their logistics operations and their mining capabilities last year. But we've also seen volumes diverted through to Lüderitz Port and in Namibia to accommodate additional volumes. There are still some key opportunities for growth, like the relocation of PE Port to Coega and upgrading the Northern Cape Rail Corridor to increase manganese exports. In August this year, South Africa granted rail access to 11 private companies. This included Maynard's newly established ferromanganese business, as a part of government's reform to increase rail volumes. So over the long term, manganese is one of South Africa's most promising commodities, not only for steelmaking, but as a critical mineral for the global energy transition, moving up the value chain into your battery precursor production. So overall, the manganese market is expected to remain tight in the near term, with strong long-term growth potential from EV and battery storage. South Africa's future in manganese is bright, but only if we can deliver on those logistics and infrastructure promises. So logistics is one of the most pressing challenges. For bulk commodities like chrome and manganese, rail is critical. In the past, Transnet Rail could move massive volumes efficiently to ports, and today reliability has weakened, with rail capacity down significantly. We've seen derailments, copper cable theft, and equipment shortages, where rail performance has steadily declined. Although we did see some modest improvement from Transnet's latest financial year results ended March, signaling that Transnet continues to push to overcome these persistent challenges like train availability, infrastructure constraints, and security incidents. However, the generally weak rail performance has forced mining companies to switch to trucking, which has supported export growth for both chrome and manganese over recent years, but it's far more expensive and creates road congestion and safety risks. Ports are also congested with slow turnaround times and frequent backlogs. These bottlenecks lead to ore stockpiling at mine sites, higher logistics costs, adding $10 to $15 per ton in some cases, and also a weaker global competitiveness. Contrast this with Australia, where manganese producers have consistent rail and port services. Their integrated rail and port chains allow seamless bulk transport, meaning Australian ore lands in China cheaper despite higher shipping distances. So for South Africa, solving infrastructure issues is critical to preserving our leadership. So energy is another major obstacle, particularly for beneficiation. South Africa's ferrochrome and ferromanganese smelters are among the most power-intensive industrial facilities in the country. So with Eskom's rolling blackouts or load shedding, smelters have been running at reduced capacity or have temporarily shut down. Electricity tariffs have risen sharply, and this erodes profitability. Meanwhile, competitors in China and Kazakhstan benefit from low power costs, which is why much of the world's ferrochrome production is shifting away from South Africa. Renewable energy does hold promise with our forecast for rising capacity over the long term, but grid constraints and regulatory hurdles are slowing rollout. With this being said, the private sector is building renewable energy projects with miners like Asmang and South32 exploring solar and wind integration. Also, regulatory changes now allowing self-generation of power over 100 megawatts, which could eventually stabilize supply for smelters. But achieving energy stability will take years of investment. Without affordable and reliable energy, South Africa can't benefit from its resource base through local beneficiation. So there is some positive momentum from policymakers. Over the last few years, government has recognized the urgency of mining and beneficiation reform. In 2018 through to 2021, we saw proposals for chrome ore export tax aimed at boosting local smelting. By 2023, load shedding had peaked, and this sparked proposals for special tariffs for energy-intensive industries and also pilot programs for private logistics participation. In 2024, the government launched a logistics roadmap, opening rail slots and port concessions to private operators. And more recently, policymakers are reviewing the export tax approach, shifting towards incentives rather than punitive measures. And then looking ahead from 2025 and beyond, South Africa's critical mineral strategy could include targeted support for chrome and manganese beneficiation, as well as battery metals. So this is encouraging, but investors are waiting to see visible progress before committing capital. So then just to wrap up, taking a step back, South Africa's chrome and manganese industries are crucial to the global economy. We have the reserves, the expertise, the market demand, but the path forward hinges on three things: infrastructure, solving the rail and port bottlenecks, energy, delivering affordable, reliable electricity, and then policy clarity, creating an environment that attracts investment rather than pushes it away. If these challenges are addressed, the upside is tremendous. Chrome and manganese could be the pillar of South Africa's economic growth and global competitiveness. At Afriforesight, we are cautiously optimistic. The fundamentals are strong, but with the right investment and policy choices, South Africa can maintain and even grow its leadership in these critical minerals. That concludes the presentation. Thanks for joining us. We'd love to hear your thoughts and questions.
Okay, let's see what we've got here in terms of questions. Just a reminder, yes, there should be a Q&A button you can use to send through any queries on your side. Let's see if maybe this one works. There seem to be some over here. So, I mean, we talked a lot about the SA side of things. On the global side of things, at least in terms of steel and stainless steel production. But of late, we have been having quite a lot of back and forth and some definitive concerns about SA Steel. What's the latest and what's been happening to ArcelorMittal's operations here in South Africa, Devin?
So South Africa's operations is also a very similar story to, I think, our alloy smelting industry. Those high energy costs and also increased competition from regions like China have sort of weakened the fundamentals for ArcelorMittal South Africa, and particularly their longs business, where they have decided that they are going to proceed with their wind down of their production because the profitability and domestic demand for South African steel is just not quite there. So they've in fact gone ahead planning to wind down their operations this from the end of this month, unless some major reforms can come into place to support their operations.
There are a couple of questions about the pricing. I mean, we didn't focus too much on the price outlook there, the forecasts. Could you maybe just in brief run through some of the quick summaries of the chrome and manganese price forecasts there?
Not a problem. Yeah, so as I mentioned, the fundamentals are strong. I think we have some constraints in the near term, some geopolitical tensions, issues with China's property sector sort of holding back the construction demand in the near term. But long term, we expect some of these geopolitical pressures to ease, sort of support reduced inflationary pressure and boost consumer demand, particularly global consumer demand, which is good for your stainless steel output and the demand for your chrome ore, where later we're also expecting some easing of China's property sector constraints or some stability and recovery there, while there are still massive infrastructure developments and investments still going ahead to support demand for steel and therefore manganese ore. So generally, fundamentals show strong demand, where we do see rising prices. And then towards the end of the period, we should see some of that battery sector demand pull through for manganese.
Good. Thank you very much. I see that there's a question specifically about the permitting of the chrome ore side. I'm going to have to circle back to that and provide a direct response. I don't necessarily know if it differentiates between chromite sands or not, but I will certainly look into that and respond when I can there. Another question here is quite broad-based, and then it talks about the threats in terms of government policy and regulation. So, and the question is basically whether the government understands this and has the political will. Now, certainly at least parts of the government do fully understand this. If you look back at the NERSA agreement that came through a couple of years ago to support the Samancor operations and gave them some relief, all the overarching arguments and the various aspects that they took into account did accurately look at how much this generates for the local economy and what kind of risks losses of these industries can create for putting more pressure on our labor base, which is already not utilized appropriately enough, or could effectively raise electricity costs for every other user in the country. If we start to lose more of our energy intensive users, there are fewer people paying for the cost base of Eskom to provide electricity for everybody. So there could be a little bit of the fact that we have still seen pullbacks in ferrochrome, certainly in the last year or so, that might have encouraged NERSA to give Eskom a little bit more of an increase in the most recent adjustments. But I do think that government is cognizant at the very least. The question of whether or not they have the political will, I also think that does genuinely exist. But even when both of these things are in place, we don't necessarily see, unfortunately, the realization of even the best of plans. If we focus specifically maybe on maybe the iron ore industry. Several years ago, there wasn't any real concern about a collapse, and there was plans to boost our output over time and to make sure that we have enough capacity to enable Kumba to ramp up. And obviously, none of those things came to be for a variety of reasons, not specifically withstanding the particular war. They needed to get the investment. There were issues with not directly related theft, or maybe even directly related sabotage. So there are other factors that are holding back the government's push, whether they are within the government or seemingly corrupt elements from outside that still have some sway. It's not 100% clear. But I do believe, at least looking in at the official statements, that the government is fully aware that these are critical industries, and the will is there, the intent is there to move these forward. But realizing them does take a combined effort. Yeah. I see another question. We did cover the price outlook for the near term, I believe. So beyond that, don't currently see any other active questions. There is a hand up though. We cannot necessarily allow you to speak or use the camera at this point, but if you do have a question, you're more than welcome to put it into question and answers area. Okay. On the topic of ArcelorMittal, what is or is there some credence to the idea of renationalizing the operations or nationalizing the smelter companies that are shutting down? I think this is quite a high-level economic question. I don't know, Vinesh, maybe you have some broad thoughts on the ideas of nationalization.
So an incredibly interesting question. And it often comes down to, what does nationalization look like? So if the government had the money, certainly coming in and buying Mittal's steel mill and trying to reopen it, same with the chrome smelters, could be done. And if it's a purchase at a price that those sellers are willing to agree to, that probably goes down relatively well, and people's jobs are saved, and South Africa's economy continues to grow. However, there is a question over valuation. This is often something we've seen where companies say, well, we're not making any money, so we're going to shut this down. But if we were to sell it, we would want money for it. We wouldn't just hand over an asset. And sometimes there are significant liabilities tied to those assets as well. So nationalizing in a way of simply taking an asset scares off international investors, can have significant repercussions for a country and a government. So certainly worth consideration, but it would probably need to be done in a way that a Mittal, a Glencore, an ARM would agree to those sales, more than just a straight government seizing of assets. But certainly something to consider.
Thank you. There's another interesting question here, looking in at the potential for the ongoing conflict between Russia and Ukraine to potentially have any impact on these commodities. In terms of direct supply, neither country is necessarily too critical. I do believe there's a bit of a ferroalloy link, from Ukraine side of things, but 3 years in, we haven't heard any pressures necessarily if they are not able to continue their side. It hasn't necessarily been noticed on the ferro manganese side of things. In terms of the sort of depression of regional activity and uncertainty that these conflicts can raise, and the potential to hold back activity in certain countries, I think that's a relatively obvious negative in the near term. But then on the sort of flip side, once we do get to the point that some resolution comes, it should open the way for revitalization, recovery activities, rebuilding to come through and raise the need for the steel and the stainless steel to get back some of the areas that have been lost and destroyed in recent years. But in terms of an outright direct impact on either the links are not so strong, at least not from Russia and Ukraine themselves. That's got more to do with whether or not the conflict is driving so much uncertainty or worries in the region or the global economy at large to hold back overall activity, which has happened to a certain degree, but has not tipped the world over into a recession. And it does potentially look like, even if it does drag on further, it's not necessarily getting worse at the moment. So if we've survived what we have up till now, we're not necessarily expecting that we suddenly tip into recession around those factors. So not much of a driver directly into these commodities as such. Devin, is there anything you'd like to add on that side?
I think you did cover a lot of it. I think the conflict probably stemmed or will filter down to the demand aspect for steel in Europe in general. I think more inflationary pressures that have pushed up their energy costs and disrupted some of their, steel operations, which would in turn affect some of the downstream demand for these commodities. But beyond that, I think you covered it, Nathan. Yeah.
Okay.
Yeah.
Vinicius, maybe one you could step in here for regarding the costs of logistics, what the impact might be on the rand price per kilometer or per ton, if critical mass becomes available. That's quite a high level question. I'm not sure what you might have in terms of an impression of how that cost impact will factor through. Do you have any thoughts at this point?
I think let's, like as you said, relatively high level. So we would expect that if logistics, particularly if rail becomes more available, that could push down on costs. While we might not be able to get to an exact rand per kilometer per ton, we would expect prices to come down. We've seen this play out in coal and in chrome and in manganese, that trucking is more expensive than rail. So if we had more rail allocation, that would allow for cheaper exports. This is why we've seen that trucking can work when commodities sell at very high prices, but that trucking tends to reduce, that there tends to be less trucking at lower commodity prices. So if there was more rail availability, we would expect lower prices of transport, but not right now that I could give an exact rand per kilometer per ton, but lower prices if there was more rail available.
Okay. Let's give it a last few seconds to see if there's any other questions after that, but doesn't seem to be anything. Just a gentle reminder, this webinar will be available on our website from later this week. And if you do have any questions that occur to you down the line, there's a couple of email addresses on the screen right now where you can send all of those. But otherwise, thank you again for joining us, and we hope you have a great day further.